Every day, traders and investors dive in to tackle the ever-changing markets to find opportunity. Futures Radio Show is your number one source for answers to the questions that all market participants want to ask. Veteran futures trader Anthony Crudele sits down with the most influential leaders and top traders in the industry. Now, here's your host, Anthony Crudele.
What's up, everybody? Anthony Crudele here, and thank you for tuning in for this episode with Chandran. Futures Radio Show is sponsored by E-Mini Group. They are the world's leading and most diverse futures and options exchange. E-Mini Group's markets help individuals and businesses around the world effectively manage risk. For access to free educational tools and resources for the active individual trader, please visit activetrader.cmegroup.com. For new show notifications, please subscribe to Futures Radio Show on iTunes, YouTube, Google Podcasts, Spotify, and Stitcher. If you're enjoying the show, please leave a review on iTunes. This show is also sponsored by Trading Technologies, RJO Futures, and FTSE Russell. The Russell 2000 is a key benchmark for small-cap U.S. stocks. Be sure to check out the E-Mini Russell 2000 Futures symbol, RTY, and Micro E-Mini Russell 2000 Futures symbol, M2K. To learn more about FTSE Russell and their products, please visit FTSERussell.com. Today, I spoke with independent trader Chandran. Gotta tell you, I really like Jay. He's one of the good guys in our industry, and I've been following him on Twitter for a few years now, and his pinned tweet is a story on how he borrowed money from his dad, blew it all in trading in a very short period of time, and then took a year off, and then the next 3 years he worked on making that money back and paying back his dad. And I think that we could all relate to that. At least I know I can relate to it. I had to borrow money early on in my trading career, and it took me a few years to make it back and to pay everybody back. So that's where we kicked off today's show, with Jay sharing with us that story, and importantly, what he did during that year off after he lost that money. I think that many traders would have tried to rush back in. At least I know that I did, and that was my mentality. I got to get back in and make it back right away. But Jay composed himself, took a year off, and really dug deep to figure out what he did wrong and how he could fix it. And a lot of that really came down to position sizing. So we had a really great conversation on position sizing. We talked about how he uses market profile for an edge in his trading, and how he primarily focuses on Nifty futures. Nifty futures are basically the Dow in India. And then we talked a lot about scaling in and scaling out. Jay and I actually have that in common. We both like to scale in and scale out of trades. And then last but not least, we talked about a subject that I think is extremely important to me, and I think to a lot of other traders, and that is using meditation to help us with a mental edge in our trading. So without further ado, let me take you right to the interview with Jay. Jay, welcome to the show, my friend.
Thank you, Anthony. Thank you for having me. Really a proud moment for me.
It's a proud moment for me as well, my friend. I really have been following you on Twitter for some time. Really enjoy your stuff, and I'm very interested in learning more about you today. And, I remember when I first started following you on Twitter, I went to your Twitter feed, and I saw your pinned tweet. And the pinned tweet was how a farmer's son lost the family's farm and then won it back by trading. We just got to start off today by you sharing with us that story.
Yeah, definitely. So it's a decade back where my trading started. So I felt like, I started with a small money. I made good money with that. So I felt like if I bring more money, so that I can make more money. So what that time my father had some money. So what I asked him was, just give me that money. Trading is very easy, so I can multiply that money and I would give it back to you. So he said, like, okay, take it here. It is more like somewhere closer to what to say? I mean, like and 90K US dollars. So I brought back that to my trading account. I done some sort of nonsense trade or whatever you call. I couldn't handle such a big money. You won't believe I lost it everything in just 3.5 weeks. I busted the account completely. I busted the account.
Oh boy.
Uh, then I went to my father. I told, I mean, I had busted completely the money which you gave me. I thought it is easy to make money. So I felt like when I can make 10 out of 1 rupee, I mean, like in rupee terms, I'm talking about, I thought I can do the same with 100 rupees to make it 1,000. So I felt it is a easy task, but I couldn't handle such a big trade size, such a big money. So something I couldn't handle, and I lost it all. Then my dad said calmly, I mean, like, okay, now what you gonna do? I said I'm not really going to give up trading, but I want to take 1 year break out of trading. In that time, kindly take care of my expenses. He agreed again. So in that 1 year, I just went through what happened. I never went and watched any live market, but I just sat every day evening. I just gone through those trades. I saw method is same, the process is same, but why I done some sort of nonsense trades or stupid trades? What had made? Then I found out it's all about position sizing. So the position which I had placed for that big money at that time, my mind couldn't handle it out. Then I bought Van Trapp's book and I started reading what is position sizing. For that 1 year, I had refined my process. Then I took a kind of non-interest loan from a friend. Then I put that money. I started religiously trading again with a smaller quantity. The one thing is, I want to stick to the process. I don't want to increase the cushion sizing just like that, like how I did last time and busted 90K dollars. So I just wait for my trading, and if there is a trade which fits into my process, I hit it without any deviation. So slowly I built up the account. It took me 3.5 years to make what I lost in 3 years. I mean 3 weeks. So that was a very important lose trading lesson for me. Still now, it is very easy. It takes very less time to lose money, and it takes a big time or more time to make money. So whenever a loss go out of my hand, I just go cover it off, thinking that old thing which made me to lose very big. So I never repeat that mistake, and I'm successful so far. So that is the gist of the story. And glad I made that money back within that 3.5 years. I gave to my dad. That was a proud moment. I cleared all my family debts, everything. So anyway, I mean, like what I lost in 3 weeks, it took me 3.5 years to make money. So that was the biggest lesson I had learned from the market. And thanks to my dad, because he's a uh, big support. All this 14 years of my trading, he's a big support for me. Without him, I couldn't be in this place right now. So thanks for him for all the things he had done so far in my life and trading.
What a great story. I'm so happy it worked out for you. It's somewhat similar to mine. I mean, a little different, but I had to borrow money and I lost it all, and I had to start back with a small number, and it took me a few years as well to get that money back and pay it back. And I mean, kudos to your dad. Your dad said to you,
Yeah.
"Okay, now what are you going to do now?" I mean, he just seemed like he was so composed. You know, he wasn't angry. I'm sure he was inside a little bit upset about it, but
Yeah.
he remained composed and said, "Okay, what's the next step, son?"
Yeah. Seriously, for a moment I was pissed off, but see, that's what this goes like this way. I mean, like there was one trade, one option trade where I had tripled my money. Whenever I go into a losing streak or a losing phase, I remember that one trade. Always that one trade pushes me to go ahead and again try it. So all I know is I had follow the same process which made me money, but there is something different I had done. So that could be because of the position sizing. So I need to work on. But I never want to give up trading, whatever. As you always say, I mean, like I never give any room to anyone, because everyone in my family and friends know I had give up my good paying job. I had quit the job within a month to take up trading as a full-time career. So I don't want any mouths to talk about me or the career which I took. So I never give anyone any room to talk about the same. So I was very, I mean, like, what to say? I have that grit. I don't want to give it up. I can prove it here, not for the others, but for myself and my dad. So that one thing drives me. But all I want is I want to take a big break. I don't want to fight the market very next day borrowing the money. I don't want to do that. But I don't know how many will do the same. When traders lost, what they do is the next day they will come and fight the market. But it's a good break. Always make up the trader back to their track. That's what I believe. So I took that, but that time it was more of a shivering thing. But I do a lot of meditation, so that helped me to be calm and composed. What I had given, it can't be get back, whether by crying or what to say, being anxiety. We can't do the same, or we can't get it back. So what I had done, that also I learned from my dad only. He says what happened is happened. Now just sit, relax, see what you can do the next step, whether you want to quit or whether you want to just continue. If you want to continue, what is the process you want to do? So I did the same thing, and lucky it worked.
Yeah, I mean, like I said, really just great composure to have that happen to you, and be able to step back, and like you said, you couldn't see yourself really doing anything else. There was no plan B for you. This is what you wanted to do, and I can relate to that. Just a quick question. So I have a bunch of questions for you, but how old
Yeah,
were
please.
you? How old were you at that time?
So I was 26.
So still a young guy at the time.
Yeah,
And that's
yeah,
the
yeah.
hardest thing is, like, for me, when I made those mistakes, I was in my early 20s too. I was 21. And,
Mm,
and like you said, to be able to be composed after that, it's hard because you're rattled, but you were able to step back and say, you know what, I'm going to figure this out. And it might take me a little bit of time, but I'm going to stick with it. So let's go from that point on. So you step back, you lost the money,
yeah.
you recognized the mistake, and you knew you needed to fix yourself before you went back to the
Mm,
market. Talk to us about that development phase of you finding
yeah.
your process.
Yeah. So basically, all this decade, I am using market profile. Market profile is my bread and butter, along with price action. So I never used, or I never deviated in all this decade in my full time as a full time trader. I never deviated out of any of this process. So for me, my bread and butter is market profile along with price action. So I started uh, uh, as an index trader. So I trade Nifty a lot. So I just stick to Nifty. I'm a firm believer. Uh, like, if you focus on one thing, you know the nature of that one thing very well. Then focusing on multiple things without knowing how the others can, I mean, like, react, or the nature or characteristic of multiple things. So what I done was I stick to Nifty. I just try to understand how the index moves. Nifty is nothing but I mean, like, how it is Dow Jones for you in US markets. So Nifty is
Yeah.
same like for us in India. It's an index. So I used to trade only that using market profile and price action. So my process is something like, uh, I want to just see what could be the range for the day, what who is actively trading. I mean, like whether a short term fund is actively trading or a long term fund is actively trading. Because being a short term guy, I don't want to fight the other time frame traders. I mean, like I don't want to find a big fund who drives the market, because basically I'm a mean reversion trader. So I don't, so when they are present, I limit my presence in the market. When they are absent, I maximize my presence in the market. So that is how it's been evolved. So I focus to capture few points in a week where my process, or say like my setup, gives me an edge. So basically when market starts balancing, I try to fade the extreme high. When market starts balancing, I try to fade the extreme low. So basically a mean reversion to the POC, I mean like the fair price. So I do multiple times the same trade to capture or accumulate the points. That's my style of trading. So here, uh, in the beginning, I'm not aware of position sizing. I thought for every trade I can use the same position sizing. For every setup I can do the position sizing. Then over the years, I evolved watching if there is a trend trade, if there is a trend day. So I maximize my position sizing there, because I spot a trend day early. That is my one of my edge. So where I spot a trend day, I just start scaling in position slowly. Then I increase the position sizing as the trend keep on goes. So then when it is a kind of balancing day or a kind of small range day, there what I used to do is I used to have a fixed position sizing. So this all lesson I learned after the big loss. So that's how my process goes. And moreover, I have few sort of ways, so I just play only around that. Rest of the time I'll be just a spectator watching the market. I won't do anything. If there is a straight setup, I just go and play. There are times where uh, there are weeks, months, my straight setups won't play. So those times are very tough for me to hold my hands, but still I'm able to manage to sit with empty hand. If there is a trade setup with my edge, I just go and play, else I just stop.
So it sounds to me as though the biggest lesson that you learned after that loss was position sizing. You didn't change much of your strategy, but it was really just more about the position sizing aspect of it, the execution of it.
Yeah, exactly.
And what part of India are you in?
So here, Tamil Nadu we call, or the Union Territory is Pondicherry, a little town.
A little town in India, and I'm curious
Yeah.
how you learned about market profile. I mean, really, how in a little town in India that you fell in love with markets as well.
So that is another story I want to share. I mean, like when I thought, okay, let me take trading as a full-time career. So I just Googled it out what the pro traders are using. So Google thrown me the result, market profile. So then I started digging out. Those days, the what to say, the resources for market profile is very limited, and that will be, I mean, like towards a small hand. I mean, like towards not many will have access to the resource for market profile. I'm talking a decade back. So especially in India, where we don't have a resource, we set of um, uh, forums we have there. We started a thread. We started discussing about a market profile, and a lot of US traders come and interact there. So we used to ask them what is market profile, how we can learn from there. So they ask us to read Peter Stedelmeyer's book and Seabort's handbook. Those things, even we don't have access for that during that time. So we used to take, I just called a friend in US. So I asked him to take a printout of Peter Stedelmeyer's book. So he couriered me from there. So that is how it's all started. And those days, the software uh, limitations is huge here. I mean, like we don't have big softwares to plot market profile. So we used to write code for Ami Broker, and we used to plot market profile, and even we prepared a kind of Excel sheet to plot market profile. Sometimes we used to draw in hand how the price, where the POC could be. So like that, we, because those time resources are very limited to India for us especially. I mean, like at least for a trader like me, I don't know where to get the help from. So it is all of self learning, and friends from US, they had helped me a lot during that time, and a bunch of traders, we just sit as a unit and we start learning from each other, trial and error. Then I get a kind of process. Okay, this is the thing it is going to be. Then later 5 years or 6 years, we got access to those tools. Then I started investing there. I bought Market Delta and then shifted to Sierra Charts, then Ninja Trader, all this. And happy now I have my own tool. I mean, like we develop market profile softwares here. So that is how I the market profile journey evolved in my career.
It's, I gotta tell you, it's fascinating and impressive. And I mean, I just love your grit and your persistence. It's, man, I gotta tell you, I love it. And you wanted it, and you went after it, and you got it done. And I want to go back to the position sizing a little bit, because I think that this is obviously an extremely important aspect of trading. And you had a strategy, you liked your market profile, and then you went in and you made some mistakes with your position sizing. Let's talk specifically about the mistakes that you made. Obviously, probably trading too big. I mean, that's the obvious one. But then how you got to the point to where you execute now, how you refined it.
Yeah, basically, the problem started when I trading the big account was I traded the P&L. That is the problem I found actually, because those big so the big P&L swings happen when you have a big position sizing. So uh, uh, the creator of that mood swing is only because of the big position sizing. So what I done was I started uh, thinking this way. I mean, like when you have a loose position sizing, you are calm and composed. When you have a larger position sizing, at that point of time, you are doing some random trades to win it back, or you couldn't handle such a big P&L. So every one of us, I mean, like every one of us had, from their childhood, they had seen some part of the money. I mean, like that is the biggest money they had seen in their lifetime. Once you give some money out of that level, they couldn't handle it, or they have a fear of handling it. That I had learned from my story, and also from a lot of my friends, where they couldn't handle a big money. So then I felt like find my edge, where when I put a big trade size, I should sit calm from the initial point of the move. So pick and put your big trade size there only. Then I found the scaling in and scaling out in the position sizing. So when I spot a trend day, what I do is, if I go, for example, let's say if I want to go for 100 lots. So I initially start with 20 lots. If the trade goes in my favor, then I slowly scale in 20, 20, 20, just like that, till some part of the time, and then I will allow the trend to play and the trend day to play, where it will close at extreme. But prior to this, what I used to do is, I just, if I am capable of 100 lots, I just put the 100 lots initial entry itself. So that was one mistake I was keep on repeatedly doing, where that had created lot of losses for me. That one thing, when I removed, when a trade works, I will just put increase the position sizing, especially on trend days. If not, I will just stick to, if my capacity is 100 lots, I will stick to only quarter of that, say like 20 or 25 on any given day. I won't go more than that. When there is a trend day, I just maximize that, whatever I can go for. So that is how it's been evolved. So here you need one, as a trader, you need to know what is your edge. I mean, you might have multiple edges, or in the process, you might have multiple trade setups, for example. But out of the trade setup, there is one or two setups where you will sit with comfort. I mean, like, you don't have any of your monkey mind keep talking or blabbering in you. You will feel like, okay, this is the setup. Okay, this is a setup I just want to go. That doesn't mean you need to go into the overconfidence zone, but those are the setups will give you a comfort to take that risk. Especially if you watch it, the good trade setup, your monkey mind won't blabber. You will be like a saint sitting calm and composed, and then it starts working all the way. But rest all setups except your edge, your monkey mind will just put a dance inside your mind and keep blabbering. Hey, this is going to hit your stop loss. This is going to hit your target. Come, just take it out like that. Then you will have a mess. So during that time, make sure you have a very less position sizing on those trades. Yeah, that's it.
Okay, traders, we're going to pause for 30 seconds and we'll be right back. A question I constantly get is, what platform do I use to trade futures? Well, I use TT. They are the world's fastest commercially available futures trading platform. Learn more at tryttnow.com. RJO is a long-standing brokerage firm with personal broker relationships to help you learn and trade futures. To learn more, please visit rjofutures.com. A few things I want to talk a little bit more about. So scale in, scale out, that's very similar to what I do. I mean, what I learned is the same thing that you learned, is that when you want to be in a full position, I don't want to be held by one price, because the minute it goes against me or my way, there's just too much emphasis on that one price. I like to feel price. So when I get in, if it's working my way, I like to add to things that are working for me. So I like to initially see how the market reacts to my level once I get in with that smaller position. Is that a similar thing for you, or just dig a little bit deeper as to why you like the scaling aspect of it?
Yeah, basically, the same thing what you had narrated. I mean, like, in trading, we all have, as I said, there are one or two setups where you can sit comfortably. I mean, like, where you don't need to, what to say? I mean, like, run here and there. You might think multiple. I mean, you might have multiple thoughts what this is going to do, whether this is against my trade. So to know that, you just start with the test size. That's what I call it as. Put a test size, test the waters first, see whether you are against the tide or with the tide. Just go. If you're against the tide, the initial position sizing will tell you. I mean, the initial scaling position will tell you. So get out with a smaller loss, where your loss could be even less than your 1 hour. If you go with that kind of, so if your initial position size starts working and you have a bigger target, start scaling in on slowly on an average, because your risk is going to be the same and your reward is going to be a big. But only one thing is, this initial position, the test size metric, will always help you to know whether it is working for you or whether it is not working for you.
Exactly.
And for example, let's say if I started scaling in, okay, at a point, if I expect a trend day, let's say, I mean, like, I'm taking a trade at 10,000 level, I'm expecting that day it is going to be at 10,100, or I'm expecting the market to be bullish and closing at the highest point of the level, say like 100 points. So initially I start, my quantity is, say, like, my max quantity is, say, like 100 lots. So I start with 20 to test the waters. For example, if 10,000 to 10,020 goes with volume and shows me the sign and it drives the price perfectly, I will add up next 40, next 60. Slowly I will just add up. Okay. At a point where my target is, say, like 10,100, but this price, my max scaling price was 10,050, and price goes to 10,070 and stalls there or reverses back, what I will do is I will just keep scaling out the positions rapidly, because meaning that uh, that trade is not going into the favor of a trend day. It is just could be a normal variation day where it just went for a half and it could retracing back. So why I want to take that? So I will just scale out. So basically, when I'm scaling in the positions with my full lot size, I will be continuously monitoring the auction. I won't just leave the desk, or I won't just think it is a trend day, it is going to close at one extreme of the day, so it doesn't mean I need to, but I will be keep on monitoring. So scale in and scale outs are very important thing for any full-time trader. They need to keep uh, learning this art actually.
Yeah, I think that is definitely an art. And I think back to myself and my journey in getting better at execution and position sizing is going back to about that 100 lot. If I'm held by one price, if it goes against me right away, all of a sudden I feel all this immense amount of pressure, even if it's not near my stop loss. All of a sudden I feel too held to a price, so sometimes I would scale out of some of them right away, then they go my way, and then I found myself getting back in and then over trading. And the same thing went if I just got into the 100 lot and it went my way right away. A lot of times I'd be like, okay, I'm in a full position, and I'd start peeling them off right away. So then what I was doing was I was not holding the positions as long, because also that feeling of being in at a full position right away. So I had to go back to the drawing board for myself and say, look, feel the price. When it gets to an area you like, I have a range of execution. If I'm going to do a 100 lot, I would do it very similar. We'll stick to what you're doing with 20, 20, and 20. I would buy the 20. If it went against me a little bit, I'd look at the scenario. If all of a sudden I saw a reaction that told me, hey, you want to get in more here, whether it was against me or my way, I'd get back in. Sometimes I get in, or I would not get back in, I would add. And then it always would depend on the situation. Sometimes I'd be adding quickly. Sometimes I'd be adding slow. But what it did was it allowed me to feel the area that I liked. And when it would start to work, that would also, because I had been in a trade for a little bit of time, when it started to go my way, I felt that I actually withstood that initial blow, right? So when it started to work for me, then I started to have the patience to hold it longer. Is that similar for you too?
Yeah, exactly. So basically, I want a context. First, I want to frame a context. What is the range it is going to be? I mean, as you said, I just want to have some sort of entry zone, not a single price, but I want to have it as a zone actually. Say like a 10 points or 20-point zone. I want to accumulate uh, all of my trade size over that zone. Okay. So here, as you said, context plays a bigger role. Uh, it is something like this. Uh, Context is very important to develop the plan, the sizing, and the risk for any trade. Without a proper context, you can't plan out any of this size, any of this thing. Whether there is a context where it could say you can scale in multiple times. There is a context where it will say you can scale in one time and scale out. So it is all like depends on the context. You can't do in trading. I feel like this. You can't do the same thing every time, every place.
Exactly. Yep.
So it is like you need to keep changing according to the market nature or the market context.
Yeah, look at this year for the E-Mini S&P, and if I would have been in too big of a hurry to get into a lot of my positions, they would have wiped me out of my stop immediately. So a lot of times this year, a lot of trades, I was getting into my first portion of my size, and I would be getting stopped out immediately because the volatility was so high. And then it was things started to slow up, and in certain times, even during the volatile areas, I'd get in and I'd have a great reaction. Then I would add real quick. It's always dependent of it, and that's why we both agree that execution is really an art, and that's why I like zones. That's why I like scaling in. That's why I like scaling out, because it gives me options on the different types of days.
Yeah.
I want to dig into your market profile a little bit more, because you talked about your edges, and how you use market profile for that. I know it's hard without
Mm-hmm.
seeing the charts in front of us, but can you just give us what it is that your edge is using market profile? Like maybe one of your favorite setups?
Okay. So basically, I'm a firm believer. Though people think this way. I mean, like people think full-time trading means they need to trade uh, 360. I mean, all the 5 days of a week, all the five trading days of a week. For me, it's not. Uh, for me, my focus will be I'm very focused and I'm sitting like a hawk to find that one trending day in a month or two. That is where I use market profile to find when that trending day will come. I mean, like all you need. That is what I tell. I mean, like whoever asked me, all you need is one trending day in a month to make you make up the account. So I use market profile to find the trend day as early as possible. So when market have a perfect bell shape or I mean like a kind of distribution. I mean bell shaped distribution the prior day. On the very next day, I mean like market starts driving up in one side with volumes associated with that right from the beginning. I just go. I don't miss those kind of days. That is my age where I can. The risk is going to be the same, but the reward is going to be a very big. I mean like so I use market profile to find when the trend is going to kick start. It could be for a day, it could be for a two or three. I mean, like, but I want to enjoy the trend till it ends. So, for example, the prior day, if there is a bullish trend day, next day also I will look for a same opportunity there because after the trend day, you can have multiple opportunities on the same side. I'm not sure about how it works in US market, but Indian markets for sure, most of that I'm saying high probability. If I get a trend day, the very next day I will have multiple opportunities on bullish side. So capturing a trend day and trading the very next day is my edge always. Whether it's a bullish day, bullish trend day or bearish trend day, I want to stick to that trend until it ends. So using market profile, just I want to see what kind of profile shape. I mean, like what kind of nature the auction is being conducted. Is that a balancing auction or is that a trending auction? Because I want to just observe the price action. I mean, price auction or feel the price, as you said, feel the price when market goes sideways, when market goes balanced, because that is where lot of information is revealed to you by price, from price. When market starts balancing, people just go right. I mean, traders go right, left and center. They trade it and they lose it all. They lose their capital, they lose their mental capital as well. But that is the time you need to stay calm. You need to watch the price action, how it is going, feel the price, just see where the next trending move is going to start. Just start with, as I said, put the test size. Just keep testing the waters. One test size will show you the trend is going to kick off, then keep on adding up. That is how you are going to make big money in the markets. You don't need 100 trades in a month or say like 50 trades in a month or say like even 20 trades in a month, but one or two trend days, if you're able to capture it, you can seriously make a big difference in your account. Though you are a mean reversion trader, try to focus on this. So that is my biggest edge in this decade. I mean, like over a decade of trading, I focus mostly, I bet most of my money on trend days.
I've said so many times on this show and on social media, you make money in moments in this business. I don't trade every day. I mean, in my early 20s, I did. Obviously, when you're learning the business, you're out there every day, and you thinking because you trade every day that you're productive every day, that you're going to be making more money. It doesn't really work that way, as you explain so well.
So
It's all about the moments.
I say this. I mean, like don't trade for your broker.
Exactly.
for their commissions.
Yeah, exactly.
Trade for yourself.
You
Yeah,
trade for
don't trade for
yourself.
your broker.
Yeah, and
Yeah, don't trade for your broker.
but that takes time.
I know, that's what I mean. Like, basically, trading is more like a evolution as a human being. I mean, like, I take it this way. I mean, like, how a normal human being go to a saint stage. Okay, that is how a normal trader to a pro trader. That is the stage they need to go.
Yep.
So
Yeah,
it is
trading is a
it is
journey of
something like that.
oneself. Yeah, I want to go back to something you said earlier, and it's something that I started late in my career.
Uh,
Meditation. You said that you went and
yeah,
meditated on it, and boy, I tell
yeah,
you, if I could go back and change one thing in my career, it would have been meditating right out of the gates. Really, in my life, because meditation has changed my life in so many ways. It's made it so much better. I feel like I'm so much more in control of my decisions. I'm somebody who is by nature an overtrader. I'm somebody who wanted things right away, and it took me time to be able to slow things down, calm myself down, and just be a better decision maker. And a lot of that came through meditation. And I'm curious for you in your trading. And we talked
yeah.
about some of the statistical things that you look at when you're looking at, and the technical things that you're looking at with market profile for your edge. But
Yeah,
how much do you
yeah,
attribute to your mindset, your mentality, meditation for your mental edge?
yeah. So, see, I mean, like for me, 90% of my trading revolves around that. Only 10% I just give weightage to whatever technicals or whatever the processes. Because once you know the process, you don't need to reinvent the wheel. That is going to stay for that, for till your career, until something dramatically change on the market structure or market dynamics. So apart from that, to follow the process, to come out of the trading slumps, you need such a mental balance, or say like kind of mental attitude, because market push you down many times. It is like how you get up. So meditation seriously helps. Without meditation, I started meditating from my school days, but those days it is a kind of what to say, like a homework for us. So without knowing what I'm doing, I mean, like we just as a kind of brushing our teeth, we used to do meditation. But a later part of the uh, uh, my, I mean, like life, I took it serious. I used to do meditation twice a day. uh, Usually, I mean, like 10 years before, it's been like say like 20 minutes max I can do. Now I can able to do for an hour without any, I mean, disturbance or anything. So that seriously helps actually, because in trading it's all about, once you are in profit, come to the middle is balance. Once you are in profit, I mean loss, come to the middle is balance. So it is all like how the whole day you are in a balanced state. Without meditation, meditation brings the awareness. As I said, the monkey mind's role is very big when it comes to trading. The self talk, that self talk you need to be aware of. What is the self talk going in when you are winning? What is the self talk going in when you are losing? What is the self talk goes when there is no trade for continuous even 10 days or 15 days? Because your monkey mind will just pull you out, want you to do something. I mean, like just it will push you. If you don't do meditation, I can guarantee you your monkey mind wins always. You, it is the one which will win you every time. You can't win that monkey mind. But meditation helps you to be aware of that monkey mind, aware of what the self talk is going, aware of what the present state of market is, and you will be always in a flow moment. I am a firm believer, whether it's trading, whether any other thing you do, when you do it in a flow moment, you will have and you will get that result whatever you decide for. So meditation is a serious thing. I always ask my followers to do it, be it any kind of meditation. Just observe your breath. At least if you can observe your breath, keep observing your breath, you can get aware of that self-talk first. So you can know how your self-talk is altering yourself. So it's a big subject for me. Without meditation, I feel like I wouldn't be calm and composed, and I wouldn't achieve this trading success.
I feel the exact
So
same way.
meditation, yeah, meditation should be a part of every trade. It's not only for trading; it's for anything, any profession nowadays, because stress level is high in any profession. So meditation really help you to bring the stress level, and it will make you more contented, a contented person. You will feel like as you are having everything, you will be always contented. So when you are a contented, trading will be a real bliss.
I do meditation before I do everything. I do it to begin my day. I do it before I trade. I do it before I go out to dinner. I do it before I do these interviews. And they're not
Okay.
long meditations. You know, I'm somebody who has really learned that I don't need to meditate for a long period of time. You know, I
Mm-hmm.
if I could meditate for even some instances a minute, 30 seconds, like you said, just recognize your breath. And to me, just
Yep.
by doing those simple things, you don't. I think that so many traders out there go, "Oh, I don't have time to sit there and meditate for 30 minutes, or my mind runs too long. It's hard." You know, you don't need to do it that long. You could do it for a short period of time. And I do small meditations a lot. And it's like I said, inherently, I'm somebody who is, I am just compulsive, right? So I need to calm myself down. So for me, meditation, I have learned that it's huge for me in every aspect of my life, especially for trading. If I don't meditate before I trade, I don't feel the same. I literally have to walk away, even if I take a minute or two, find my breath, and come back. So I agree a lot of what you said, Jay, and really, you and I could talk all day about this, but I've got some
Yeah.
rapid fire questions next if you're ready for those.
So, before that, I just want to do. Just one word of meditation. Meditation is something like a charger for you. If you do a meditation for 30 minutes, you can get charged for, say, like, for next 6 hours. So you won't get tired at all. You
And
will be in such a state of mind where you will go with the flow, whatever you do.
yep. All right,
Yeah.
everybody. Our rapid fire segment is sponsored by Trading Technologies. Trade the global markets with TT. They are the world's fastest commercially available futures trading platform. Now with integrated tools for advanced options trading, cryptocurrencies, and trade surveillance. Learn more at tryttnow.com. Jay, first question for you. What trader has influenced your life the most and why?
George Soros. Uh, because the trade where he bet against the British pound. Before going to sleep, I always think about the trade. What sort of conviction he have? How we keep on scale in that is where I got the scale and concept. When he knows something is going to happen, when he is very sure of that, when he have such a conviction, he kept increased his trade size and made a fortune. So as a trader, there should be one trade where you should be proud of. So George Soros is my man. That one trade I always remember of. Whenever I go down, I always remember that one trade which made me to come up.
What was one of the hardest things for you to overcome in trading?
Definitely it's over trading. So beginning days, I think, if I'm a full-time trader, thinking full-time trading is like you need to keep on trading. So over trading is, something where it is very hard thing for me to overcome. Later I found, when I stick to my process, when I stick to my edge, because my edge doesn't come every day or every minute, so it comes in few days of a month. So now the trading had been reduced. but I keep on experimenting, but that doesn't go into a over trading category, but I just go with a very less position sizing and keep on testing it out. So that one thing is hard, but I had overcome.
How has your trading process evolved over the years?
My trading process evolved, say that's what, as I said, uh, before I used to trade a lot. I mean, like now, one good trade, one good trade, one good trade. That's how I focuses. My focus: aim small, miss small. Uh, Before it is like aim big and lose big. Now it's like aim small and miss small. Uh, just stick to your edge. When your edge presents, just go and hit it. Else sit at a bay and watch the shore. I mean, like a market is a kind of sea where the waves come and go. When you are comfortable, go for a swim. Else just watch and enjoy the beach.
What is one attribute that you believe every trader should have?
uh, if you ask me, it's not one, it's two. Uh, Patience and grit.
Favorite book about trading?
Pitbull by Marty Schwartz.
If you had to pick a profession other than trading, what would it be?
Setting up a restaurant, being a foodie, I always, I mean, have this in mind. Though, I mean, if I wouldn't picked up trading, I would set up a restaurant.
What's the best piece of advice you received about trading?
Do one thing better than doing multiple things in an average.
If you could give a piece of advice to the younger you about trading, what would it be?
On any given day, trading in nutshell is all about risk management. Spend or give all your energy, focus more time on it.
If you had an elevator pitch me your edge in trading, what would you say?
Stick to what works and do more of it.
Last question for today, Jay. What's your favorite thing to do when you're not trading?
Cooking. Cooking biryani. I just take my kitchen all the weekends, because I mean, when I make a loss or when I make a profit, I just go hit the kitchen. I just try some new recipes, and that is my stress buster always, and kind of passion for me over cooking. I mean, it drives me. Other than trading, it's always cooking for me.
Yeah, I love cooking too. Not as much as I used to. I kind of go back and forth with it, but I do love to cook. It is definitely a passion of mine as well. And to me, cooking is a form of meditation.
Yeah,
I love the
it's an art.
pictures. It is, yeah, and I love the pictures you put out, Jay. All of the foods that you're either cooking, or a lot of times you're traveling and just showing different foods out
I
there.
mean, I spend most of my time in villages, actually. The way the mother nature is there. I mean, because I hate city life. I want, I mean, like a very peaceful life. If you see the post which I post from my village, everything will looks greenery, the cows, the cattle, everything out there. So I love that life. And as I said, I will love you to come here. I'm happy to host you here.
Jay, I'm telling you, I'm coming there. I don't know when it's going to happen. How is everything going with you guys right now with COVID-19?
It's a big mess here. I mean, they are trying hard, but I mean, like it is out of control here. So they are trying hard. But Indians are very good with their immunity, I tell you. I mean, like that is why we are surviving here. It's very good. I mean,
Yeah, well, I wish you the best, my friend. And where could people find you on social media, specifically Twitter, and give us a website to check out?
yeah, I mean, like I'm more active on Twitter than any other social media. So people can find me. My Twitter handle is Nifty Wizard, and my website is www.niftywizard.com.
Yeah, everybody, you have to follow Jay on Twitter. He's a great follow, one of my favorite follows. And Jay, what can I say, my friend? It was an absolute honor and to have you on the show today. Thank you so much for taking the time to speak with me.
Thank you so much, Anthony. I mean, like, it's a dream come true or a proud moment for me. I mean, I listened or I made a lot of progress in my trading listening to your podcast from day one. I mean, like, and I'm glad I'm invited. I mean, like, I'm part of this podcast. It's a very proud moment and a proud day for me. And as I always say, I mean, like, I'm uh, just seeing myself on you. I mean, like, whether the tweet you put or whether the process you go on, I'm just seeing myself there. That's it. I'm sitting in India, you're sitting in US. That's the difference.
Yeah, I know. Well, it was such a blast speaking with you, and I'm going to have you back on the show, and maybe we'll do a video Skype on my on Develop Your Edge, and we're going to continue this conversation, my friend. So thank you again so much for joining me on Futures Radio.
Thank you so much, Anthony. Thank you. Thanks a lot. Thank you.
Thank you for listening to Futures Radio Show. If you enjoyed the show, please leave a review on iTunes. You can listen to all of our episodes on futuresradioshow.com, iTunes, YouTube, Google Podcasts, Spotify, and Stitcher.